Hey there, welcome to the channel. So today I want to look at Tesla. One of the things that notice here is that Tesla's kind of been selling off a little bit recently. And so I want to kind of get into why that might be happening. If I look here on the weekly chart, Tesla has come down. It has come down about 47% from its highs, from the very highs. So, it's basically been cut in half from the very peak that it was at. Now, the question might be, um, why is this happening? What's going on? In addition, if you look at their numbers, I had done a fundamental analysis on them. And when you look at that, you can see that they have, pretty good margin, good growth, and all that stuff. In the most recent quarter, Q1 of 2022, I took a look at that as well. And you can see that year-over-year growth is good. Gross margin on the automotive gross margin, total gross margin are still like near 30%. So that's really good. Operating margin near 20%. So this is all really good. And so they really ended up with being a positive numbers. So they basically have EPS attributable to common diluted, GAAP, non-GAAP. So if we use GAAP, that would be 286 a share. So, they are growing. All that looks good. This is a very positive thing. The free cash flow here of 2.2 billion. So they're generating cash from, operating the business, which is good, which is unlike some of the other companies that we looked at when we looked at issues with Shift, even Carvana and Vroom. Some of these companies, they had issues with, they have to basically go out there and find a way to fund losses. But that's not the case for Tesla. So Tesla looks really good. Then the question becomes, well, why is it off 50% from its all-time highs? Well, given the fact that, so now we're speculating, but these are just my thoughts, and these are things to, think about. So you have a company that's growing, and it's growing very well. But see, the thing is, what's going on is we have the Fed cranking up interest rates. The Fed's cranking up these interest rates, and usually, most of the time, eventually, they will crank them up to a point where they will cause a recession. We've already had the first quarter GDP was minus 1.4%. We're basically very possibly could be in recession right now. We could be in negative GDP as it stands, and we will get an update this week on what the GDP is. We'll get the second look at it. Now, so the question then is like, okay, if we're going into recession, well, okay, does this affect Tesla? Is this going to affect them? Well, let's take a look at some data. If we go to Fred here, we can look at total vehicle sales. And this is going back to the 80s. And what you see here, and these are in millions of units, and you can kind of see that generally your sales are in between 15 and 17.5 million most of the time. So you can see back in the 80s here, trying to average this out, that you had about 16 million of car sales. And then it went down into the recession. It started to go down into it. And then in the recession, they dropped off very quickly to a low of 11 million vehicles. Then they were ramping up through the entire 90s. And once again, we get a recession, and it didn't drop off too much. But then in the 2000s, you can see that our rate was about 17.5 million. Were the car sales. And then you can see during the recession, this would be the 08, 09 financial crisis. Boom, car sales dropped through the floor. They got below 10 million. They were down to 9.3 million. And then they've slowly been steady working their way all the way up to where they're kind of back at 17.5. Then we had the Cerveza shutdown where the sales just dropped off the floor down to 8.9. That's really almost a record low. And then they came zooming back with all the money printing. But it's important to note that where we're at right now, we're only about 14 million. So we are at a somewhat low total vehicle sales right now. And so what do we see? So basically, if we enter a recession, pretty much looking at this data, car sales are going to drop off. Now, when car sales drop off because of recession, think about it. Are you going to be able to sign up for a payment for a new car when you're losing your job? Of course, you're not. So sales, it makes sense that car sales pretty much always drop off when you get into a recession, before a recession, and during a recession. And we can see the last one in the financial crisis that they really dropped off a lot. And so the question is, well, which one is it going to be? Is it going to be like the 2000 bust recession here, where it didn't drop off very much? Or is it going to be more like this one where it dropped off in the early 90s, or where it dropped off a lot in the 09 financial crisis? Or is it going to be something like a more sustainable spike here? Well, that's where it gets into speculation. I don't really know, but what I would say is that we have not recovered. And it's important to understand that right now the car sales are at 14.7 million units, which is below the historical kind of average of 17.5. So we are at a low right now. So basically, if we're looking at this and we're saying, well, what's going on? If we kind of average it, you can see that your sales are up here. You had this come off. But what you really have is you kind of have they've already dropped off. They've already dropped off. And see, they came and spiked back after the pervasive sickness shutdowns, but they haven't come all the way back. They haven't come all the way back to this 17.5 level. They haven't made it there. So the question then is, okay, so why is Tesla selling off? What's going on with Tesla? So look, basically, we're going to go into recession at some point. I think it's very difficult to think that we're going to avoid a recession. The Fed is raising rates. The Fed doesn't have the markets back at this point because they're trying to get rid of this 8+% inflation that we have. That seems to be the highest priority, and they seem to be willing to sacrifice stock gains for that. But the consequence of doing that, the consequence of pushing up rates, is that financing vehicles is more expensive. It's just, there's no way around it. The cars are becoming more expensive as we go. And therefore, given the fact, if you look at the data, total vehicle sales pretty much always drop off in a recession. They always drop off. So that will hit everyone. It will hit Tesla. It will hit everyone. Given that the price of your lowest range, so if I look at the Model 3, the lowest range Tesla is nearly a $40,000 car. This is the lowest one I could find. I was looking for all the different models, and pretty much it looks like the Model 3 is the lowest price one. It's still $40,000. That's a big chunk of money to afford to buy a car like that. That's a very expensive car. So it is on the higher end. It's not like some of your cheaper cars where they still get stuff in the 20,000 to 30,000. This is an expensive car. So they are going to be hit. They are going to lose demand. People that are going to lose their jobs, they're not going to go ahead and buy a car. And if they have to take a pay cut or they don't get pay raises, because remember, this is how this works. I've been working through a lot of these declines. One company I did, this was probably even the 09 financial crisis. So things were going to hell in a handbasket. So the company has layoffs, right? So they come out with the layoffs. They whack, I remember my group I was in, there's 20 of us. They whacked everyone except they whacked 17 of us in our little group, and there was 3 of us left, right? And then it was okay, we're all out at the we're all at lunch, everyone's complaining and everything like that, because they all got laid off. It was horrible. And but the thing is, we were kind of late for the all hands meeting after, for all the people that were left, right? Because basically they walk you out the door, you're gone. And they didn't walk you out, but it was look, you have to be out of here by lunch or whatever it was. And everyone was pretty much gone by then. But when you came back in, then we got the good news. The good news is that the people that survived got pay cuts from 13% to 9%. So it just depended where you are. The higher your level, you just got instantly a 13% pay cut. So that's the kind of thing that happens. Now, are you going to go out there and take the risk of signing up for buying a $40,000 car when you get a pay cut, et cetera, et cetera? I don't think so. So the point is, when you look at Tesla stock and you look at it and you say, it's got the growth, looking at the way the financials are, not a super financial guy, but, they got some good margins and stuff. So they got some good management there in terms of how they do that. But the other side of the coin is that, hey, you know, you're still at the end of the day, you're a car company going into a recession. A car company going into recession, you know, it's like, give me a break. You know, that's just the way it's going to be. Now, I wanted to take a one look at the other thing. So let's look at EPS per share gap. That's the one that's important. Don't look at the non-gap crap. They're just making that up. 286 a share. So that's the earnings, 286 per a share. Now, that's quarterly, right? Okay, so what we're going to do is play some games. 286 a share. So what we're going to do is we're going to take, and I'm doing this on this calculator, 2.86 a share. Let's assume they do that for 4 quarters in a row. So annually, they're at 10.24 a share. Then if you go 10.24 a share, what is their price to earnings? So their price right now, let's just call it 700. We'll give them the benefit of doubt. So divide the 1022 is divided by 700 and flip it. And we have a PE based on the current earnings, assuming that they do the same things, of about 68. So price to earnings is 68. So this is still after they've been cut by 47%. So that's what's happening, I think. That's why Tesla is selling off. Now, they still are expensive. They're expensive, and the growth is not. They're going to take a hit to growth. There's no doubt. We're going into recession. They're going to take a hit to growth. So that PE of 68 is still expensive. So that's why I think this thing is selling off. Now, the question is, are they selling off other automakers? Let's see. Let's look at GM. Yeah, they're selling off GM significantly. Are they selling off Ford? Let's see. Yeah, they're selling that off too. HMC, which is Honda Motor. They're selling that off, not as much, but they're selling it off as well. So you can see that there's this trend, and definitely, I would say the U.S. domestic ones are getting hit maybe more, because maybe they're thinking we're kind of going to be the epicenter of the recession that's going to be happening. And you look at the debt and all that stuff, and people are already pretty strapped. They've already debted themselves up pretty good. So that's why. And it's kind of interesting. So now if I put like Tesla up over GM, let's do that. So I want to compare Tesla stock action as compared to some of the other automakers. So here I'm just picking GM in purple and Honda Motor in basically yellow. You can kind of see that in a way, right? They're kind of like out of sync, but a little bit, but they are all kind of selling off a little bit together. So you have Tesla going down, you have GM going down, and then you also have Honda Motor going down. And so I think what you're seeing there is that, once again, it's the recession. They believe the recession's coming. That's going to affect demand. And so here's the thing, even if we don't technically go into recession, there's a slowdown coming. Those increase in interest rates that are occurring, it's very difficult. That has to affect demand of things that require financing to buy. Our rates are backing off a little bit, but still at 3%, it's a heavy duty hit. So that's it for this one. I think watch out for the automakers for sure.